Good morning. So this morning's panel is called Comparing Next Generation Market Data, Management Platforms, Social Media, Tick Data, and Feeds. What does it mean to the buy? What does the buy side need next? So in order to explore that, I thought we could start with so we'll start with having everyone introduce themselves and just give a brief sentence or two on their background. Starting here.
Sure. Hello, everyone. My name is Lovas, and I work for a company, OneMarketData. I'm the Director of Solutions and Business Development there. And we brand a product called OneTick, and OneTick is a technology all about data management. And so this is sort of our bread and butter business, managing financial data, doing financial data analytics, targeting use cases across the entire trade investment life cycle from research, model design, and TCA.
All right, my name is Tommi Vuorenmaa. My background is basically academic. I have a PhD in economics or financial econometrics, then went to startup HFT company, which I left about 1 month ago to start basically my own company that is doing HFT backtesting framework for algorithmic development. So basically we are trying to structure, or basically do a structure that gives a realistic backtesting results of market making type of algorithms that are notoriously known to be difficult to actually backtest for our own purposes or for our customers.
Dave Greenfield. I have a little bit of a different background from the other guys. I work for a company called Gnip. We're the largest supplier of social media data to enterprise, which for finance has meant both platform and direct consumers like hedge funds and social media analytics firms. And we work with a number of different partners, the largest being Twitter, who were actually just acquired by 4 or 5 weeks ago. And so we work on kind of the direct outbound data side of that business.
That's great. I think all of these have a little bit different background, and talking about data management platform really means how do you get all of these different things to work together and kind of seem consistent and have all the ancillary data. So start with what seems like kind of a simple question, but given everyone's background, what do we think that a data management platform really means? What is that?
You start? Hi. Sure. Again, just from my experience, I would say that data and data management really cut across that entire trade life cycle, starting with research, alpha discovery, backtesting, algo development, backtesting, optimization, and even the post-trade world around risk and compliance and transaction cost analysis. And really from that, an understanding of what you get out of data really can define a competitive advantage for your business. And able to do that, it really sort of focuses on a few key areas with data management, about managing scale, dealing with a diversity of both asset classes and data types. And sort of lastly, I think it's the solutions that use that data that are still the driving force behind what data management is. And again, that sort of harkens back to what I said about firms that are building trade models, doing any sort of research, building TCA models. That becomes a driving force about data management and the ability to manage that scale and provide that kind of data set or data sets to all those different use cases within the business.
Outside of tick data, is there any major input that you're putting into the background of that?
Sure. I mean, it really is more than just sort of standard tick level data. Of course, it sort of broadens out not just to tick level data across any asset class, from equities, and foreign exchange, fixed income, futures, but also, the collection and storage of related data. Could be just end of day data, could be reference data, corporate action data, cancels, corrections, the corporate actions being splits and dividends, really sort of that driving requirement to the business to provide a quality data product to be able to build and confidently build and test and design trade models. I mean, that's really over and above the high frequency tick level and then low frequency data that goes along with it.
So it's definitely not just tick data to make it useful. Tommy, what do you think goes into a data management?
Well, for us, the data management is basically getting the data from different exchanges and reconstructing the order book, and then basically backtesting our algorithms based on that. So that's the core. And then, of course, the exchanges unfortunately have different protocols for this data, so we had to pay careful attention how to reconstruct the order book from that data. So that's the data management that we necessarily need to do. And of course, there's other data sources, but I think this is the primary data problem that we have, which is time consuming.
Just out of curiosity, what, how do you get that data? In a really simple question.
Well, I mean, you contact the exchange and basically buy some.
So no, once the raw data is flowing to you, do you have packet capture infrastructure? Do you have, what sort of, how do you collect the data at a physical level? Not how do you fill out all the paperwork to get it to you?
No, I mean, of course, we try to minimize the amount of data basically at the start level. So while we start the back testing, we might only need like 1 or 2 months of data. So we don't necessarily need a huge amount of data. Basically, the good thing about HFT strategy, back testing, is that you have a lot of data already in 1 week. So we don't necessarily need like years and years, which is actually problematic. If you would use years and years of data, then the market microstructure would be different. So we basically try to minimize the amount of data that we. So the problem is really the different exchanges. I would say not the amount of data. It's just kind of basically time consuming to do the transformations.
Yeah. There's a bunch of questions around that, but I won't ask them now. Maybe we'll come back to them.
Could I just comment on that? I think.
Sure.
Do you mind?
Yeah.
I really see that as sort of divided into 2 levels, right? So the connection, or the direct connection to exchanges, and who are the big elephants or big guns that do that? I mean, obviously like the Reuters and the Bloombergs of the world, right? So they're the ones that do the consolidation across markets. But then it really has, over even close to say 5 or 10 years, opened up a cottage industry for the likes of smaller players to provide a better mousetrap for that, right? I mean, like Exigy, Onyx, Redline, Active Financial, they all provide that view of the world. So the likes of other vendors or other technologies that are consuming that data in the data management space, they essentially push off the requirement to deal with all the constant changing flow structure of data coming out of exchanges. So they, not in a fully sense, but a normalized view as a consolidator, I think. And then the other side of that is really the actual data management that's consuming that.
Yeah.
I'd add on one thing. I mean, I think, one thing I saw a lot in pastoral, I used to be on the kind of quantitative data feed side at FactSet, which is, kind of more historical data. But I think there's just kind of a growing merging of, kind of non-market data and market data to use in the same decision-making processes, and really across all time horizons. And, as different data sets get closer and closer to the frequency that you get with market data, there's more and more appetite to use those in tandem, and kind of needs for data management platforms to be more than just about dealing with large quantities of data, and being about, marrying disparate data sets and transforming data. Some may be about equities and some may not be about equities, to be able to take different data sets and speak to the same transactions and transform the data to do that.
Yeah. No, I'm really interested in what you're able to speak to, which is something that's not, dealing with tick data can be plenty difficult, and there's a lot of it, and there's a lot of changes. But your business, what you're involved in, is not data intensive in the same way, but it's also not structured. So it's like you have this totally different set of problems. I guess I would like to hear the original question too for you. It's like, well, how do you think about storing this data? And like, it seems very different than a tick data problem.
Yeah, I mean, so a lot of what Gnip as an independent company solved was the pure data part of that problem. So we created a lot of frameworks on top of these massive unstructured social data streams to let people filter down. A very small percentage of what happens on Twitter is relevant to the financial community. It's kind of the pairing of relevant financial conversation with the kind of relevant local, national, international news that gets discussed on Twitter that really financial communities care about. And so a lot of our framework did was allow kind of keyword and metadata search on top of that to get the activities that people needed and to deliver that in a streaming fashion. But yeah, I think there's a lot of need after that for people to take this, I guess it's more semi-unstructured data, social data as it's distributed is kind of hundreds of fields of metadata and then one kind of purely unstructured field of the actual text. And so there's a lot of need downstream that's still developing of, how do you attach that to existing kind of financial decision-making process, and how do you transform it to be about equity or about commodities or about derivatives?
Yeah. One thing that seems consistent through all of them is having some almost scientific processes for having accurate time and collecting stuff without missing stuff or knowing what you're missing. How much of each of you spent thinking about that sort of problem? I guess you seem like Lewis seemed like he wants
And I
to
think
answer.
it sort of goes back to what I said about the data quality, right? So if you look at it from a specific use case, just take a pretty common one that I think is actually starting to gain a lot of recognition. That's transaction cost analysis. So that is sort of the reaction, so to speak, to thinning margins, people looking at more risk. They're looking very close, whether it's buy-side firms or the quant trading firms, all want to understand their cost model. So that goes right back to a data management infrastructure problem set when it comes to capturing data, accurately time-stamping data, dealing with market
People
structure.
ask a lot about that?
Very much.
Time
I can give you one specific example that we just finished a proposal for a big asset manager, and one of the questions, from a range of vendors was asked, what's your biggest challenge with your current TCA solution? And their answer was data quality. Their answer was clearly data quality. So again, if you sort of bubble that up from that data quality problem to the use case of TCA, it cuts across a market structure to get real price transparency. It cuts across how do you create your orders, your executions, to be able to find initially the benchmarks against a diverse market, a fragmented market, and then how do you build out your participation rates, your implementation shortfalls, and that directly relates to the quality of data that you've collected and stored.
Yeah. No, it definitely seems like one of the biggest parts of data science is stuff that has nothing to do with finding these great breakthroughs in a pile of data. It involves being able to put your data somewhere consistently and have it, all accessible in the same way. David, your data seem, since it's so much different, like I'm actually totally, I think a lot of people are unfamiliar with how you go about getting something out of that world. Tweets, like a market data, all of us seem very comfortable with the idea of, I put something within a stock exchange, I have a server there. But your business, it's like, does co-location matter? What sorts of things go into the actual physical act of collecting this data?
Yeah, so a lot of sub-questions there. So I guess let's start with the co-location because I think that's the easiest. I think, in the most part, it hasn't been standardized enough to the point with what people are extracting and what people are using to make decisions out of social media that, people are competing purely on speed. So it hasn't evolved to that point where that's kind of been necessary. I think as stuff starts to get standardized and once you start getting multiple players looking at the same views from a single data source, then the need to kind of do it faster and act more quickly.
Where is Twitter's data center?
I don't know where theirs are. So we actually had our own data centers at Gnip, and so we're going through the engineering merge of that piece. But they've got a couple. They probably don't want me disclosing it, but I don't know either, so it'll make it easy to do that.
Fair enough. Fair enough.
But in terms of what people are extracting, I guess I'll give a little bit of my opinions. I think a lot of our direct clients are kind of the more quantitative hedge funds who, probably not surprisingly don't give us a ton of feedback. But I think we see kind of very consistent renewals and expansion of the data that they consume. And so I think a lot of the ways people approach social media is to start looking at micro components of it, to not look at the kind of full 500 million and try and find 500 million activities per day and trying to find that one tweet that moves the markets. It's to try and find aggregate data and concepts that they already trade successfully off of, and attach new information that they're garnering from social media. So I guess a good example would be, if you're someone who already trades, off of earnings announcements, it's really interesting for them to know, okay, the last, 4 earnings calls for this company, 100 people were talking about this company on Twitter in the hour before, and this time it's 50,000, right? So you know that there's some sort of kind of pent-up demand and pent-up volatility for what's going to happen with that stock, and you may not get your actual information that you act upon from social media, but you know that maybe you want to act with more conviction because there is a general market buzz around the security and around that event.
So one thing, Twitter is certainly useful in that it's data format. It's limited in size for each tweet. What other social media is being included in that?
So Gnip had partnerships with, I guess, 8 or 9 other firms, and we're continuing to do that as kind of the internal Twitter source. So we do have kind of both short form and long form content. So we partner with WordPress or Automatic, that is a company that owns WordPress, and Discuss as well. So they have kind of long blog content. We've had a little bit less adoption on the finance side, mainly because it's generated at a slower pace, and people are still at the phase where they're looking for kind of shorter term insights. On the brand piece of our business, we have people kind of use those in tandem, and I'd say it's probably our most popular slide in our individual presentations, where we kind of break down all the different sources, by kind of the data lengths and the insights, and categorize them by the length of content, and we kind of pair up how that gets used, whether it's for more deeper brand management and consumer understanding and kind of the longer form data sets, or whether it's for quick insights and quick reactions for trading or.
So that's interesting. So you have a bunch of different, this actually relates to a couple of questions, but you basically have different points in which the information becomes actionable. There can be a lot of short form stuff that maybe is not automatically interpreted, but by virtue of how often the names are said, that gives people some indication, and then some stuff is a little bit more.
Well, I guess there's 2 components. So it's how long does it take to derive information off of it? Mm-hmm. But I think the bigger component is when an event occurs, it takes people hours to write a blog entry about it, where it takes them seconds to tweet about it.
Right. Yeah, Louis, seems like you have.
Yeah, it's actually the area of unstructured data is very close to us because of the almost a tight correlation with how people are using tick level data or market data, just market data in general, or its trades or order books, depth in order book, the dynamics of the order book, to understand market movements for any sort of trading logic, whether it's execution algos or statistical arbitrage. Being able to enhance how they view the predictability of their models can be tightly correlated with unstructured data, or essentially taking unstructured data and distilling it down into effectively sentiment. So in a lot of sense, if a lot of you remember going maybe back 10 years ago when Reuters and Dow Jones created their elementized news feed and they put sentiment on news, what's happening in the unstructured world parallels that quite well. So we actually have close to announcing a partnership with a partner or a customer of Gnip, right, that actually does this. So they take the unstructured content and distill it down into structured sentiment, essentially scoring sentiments on an entity level. I mean, entity is simply IBM, a ticker,
Say
right?
good or
And then
bad.
you have a nice, easily structured content that you can then build trade models and correlate that, join that with market data, either at the order book level or the trade activity level, and you can see, is there a correlation between these things? It's quite intriguing what's a possibility. One of the things that we did, again, as a data management vendor relative to unstructured data, we were very interested in how our customers were viewing unstructured data, the impact on the financial markets. So we did a survey last year, and about a 15-question survey, and probably the most important point or response we got from that was the fear associated with unstructured data, or looking at market moving activity. Was it actually true, or was it false positives? Right, so that was a really big fear, and I don't know what the answer is now, but that certainly is a fear. And I know that, again, some of the customers of Gnip, what they're trying to do is create a high level of confidence, back to that data quality thing, creating that higher level of confidence by looking at a very defined, discrete set of sources.
Sure.
Right, so what those sources are that are tweeting, they have a confidence degree, because it's all about trust, right? I mean, if you go back to the news, you get Dow Jones and Reuters reporting news and then putting sentiment on news. There's a trust factor involved with that the information you're getting was accurate, you could rely on it. That same thing needs to happen in the social media world.
Yeah, I guess just to add on, I do think we see the same thing kind of happening that happened with the kind of quantifiable news space. And right now people that see this as this kind of open platform when anything can kind of be discussed and anything can happen within the unstructured components. And I think what we'll see happen, and what's already happening with some of our direct clients, is that you kind of find ways to narrow down that universe and to say, okay, yeah, people do talk about an infinite number of things on social media, but there's really only 50 types of events that to me are actionable, and I can figure out how to look for those events. And then once you narrow it down to something like that, you can say, well, what am I looking for? Is it a shift in sentiment, or is it specific events, sub-events that occur within that, or is it specific comments or specific people? And so I think that's the process that's happening right now, and it happens, I think, on two platforms. One is kind of intermediate vendors, the analytics firms that we partner with, and then two is some of the kind of deeper hedge funds that with deeper exploratory kind of progress will do it on their own and come up with their unique insights.
So, since there is just such, data has become so much more prevalent. It's so much easier to actually capture these things digitally. Now that we have all this data, do each of you generally feel that it's just more complex to not only manage the data, but it's, even though there's a lot of data there, you can still get a lot of value out of it? Or is it just getting harder and harder to get value out of the data?
Well, my personal understanding and feeling is that you would like to have a theory what happens actually. So I'm a little bit against the machine learning type of thinking, in the sense that you data mine and try to find something of value. So I have like a finance economic background, so I usually like to think what is actually important, and for that reason I try to minimize basically the data component, in a sense that if the result doesn't make sense to me, like from financial point of view or market microstructure point of view, then I don't really believe that. So I don't like to go through like tons of data with like machine learning techniques. So I rather try to understand what is going on and then act on that. So with respect to tweets or something like that, I'm a little bit skeptic in the sense that if I buy a product from somebody else that uses an algorithm to actually produce a sentiment number to me, and we have used such things, then you don't know what the algorithm is actually doing in between.
So basically, the signal to noise with all this new data makes it difficult to assess whether you've got all this new data, but it's still difficult to assess whether it's adding value. You put a lot of work into it.
Yeah. So I don't have any confidence, basically, what the sentiment actually is. So I get a number, and then I'm also worried that the rest of the world has the same number. So why should I act simple on that number rather than basically reconstructing basically the signal myself from other data sources? So that's my worry.
That's an interesting question since you've been in a trading group. These things seem pretty difficult to reconstruct yourself, but what I think you just said was you might just try to reconstruct it yourself.
Well, I would like to, rather come up with my own algorithms to structure the data, even though that may, take more time, but then I at least understand what is actually going on. So that comes back to the, machine learning type of thing. Machine learning can be great for some cases when you understand what you're actually looking into, but I would like to maximize the understanding of the data and the market microstructure rules instead of just blindly finding some sentiment number, because I believe that many people nowadays basically find the same sentiment number.
I completely agree with that from the point of view that again, back to that survey that we did, the reaction we got to the market was the fear of false positives, which is kind of what you're describing there stated another way, that if you detect sentiment or trending of sentiment, is it accurate or is it really false positives? But back to your original question about the complexity of data, I think that does certainly tie in, but just sort of removing the unstructured part of it for a moment, I think you can certainly look at recent events over the past few years about rogue algos, Knight Capital maybe being the most notoriously known, or even like the BATS failure, or even going back to 2010 with the flash crash, that it really has had this impact for people, and we see it directly with our customers who are building algos, who want to test a model, right? So they come up with a model, again, that idea of what quants do, right? They essentially look at inefficiencies in the market, and then they want to test an idea. They want to test a theory. And they're testing that against either up to 2 years, 5 years, 10 years of history, market history, right? Because over that time frame, you get all kinds of dynamics in the market, from bull markets, bear markets, crashes, right? What happened in 2010, right? I mean, and had happened in 2008. So that way you can essentially ensure the confidence or understand what's going to happen to your model over a very long time, well, not necessarily long time period, but all kinds of different market conditions. I think that's what has happened in terms of that idea of data complexity and how people are using data.
So it's gotten easier to answer the questions we had before.
I think it has, and technology has a lot to do with that. I mean, just the cost per storage, the dollar cost per storage of data is a lot cheaper. I mean, it's sort of this rising tide. Analytics become more attainable because if you run a test, a back test across 2 years of history, with the processing speeds and data storage and speeds of all that sort of underlying technology, you can actually do that in a reasonable amount of time, right? So that makes it much more,
just
attainable to do.
people just start asking harder questions.
Could I just comment on the data
Absolutely.
filtering kind of
Yeah.
thing, or the complexity? So I mean, some people, I think most people would like to get rid of the errors or any kind of data inconveniences. So, but from another angle, I mean, those can be very useful to actually test your theory. So, I value some of the data errors because then I can actually see if it actually, the theory makes sense. And when you basically see an error, then you can, or you should, try to understand where the error is actually coming from and not just basically get rid of it. Mm-hmm. And the reason is that when you do HFT type of trading, or I would say like any type of trading, you would like to know the reason for these errors, because when they are in real time, your algo will most likely try to act on that.
Sure. So those errors are important artifacts of how the market functioned.
Yeah, I just wanted to comment, I guess, on the back to the initial question and kind of touch a little bit on what Lewis said. I mean, I think just in general, I think we've gone through this evolution where 15, 20 years ago, the biggest data problem was how do you get data on this global universe of companies, and firms like Bloomberg and Thomson and FactSet, kind of solved that on a large scale and made all this data available both through market data and other types of data that people wanted to research. And then I think we've migrated to a point where just getting all this data, it doesn't provide any value. And then we went through a period which has gotten plenty of play. This conference is a phase where everyone's got the same data, or acting on it quicker is how you make money. And we've seen that kind of phase come to an end. And I think Lewis's point about is everybody getting the same sentiment and making the same decisions? Or I think we're getting to a phase now where the core capability of a lot of different firms is going to be how do you generate unique insights from data and do stuff that other people aren't seeing and find new information. And I think somewhat publicly, but one of the interesting moves I saw was Bridgewater a couple of years ago hired one of the lead scientists from the Watson project at IBM, and I think it's a good indicator. And I think we'll see a ton more of that over the next 5 years as people bringing in general data science people to say, okay, it's really easy for everybody to get a ton of data, a ton of different types of data, but how do we draw insights from that 50 other firms aren't seeing, or maybe there's only 3 other firms that see that, and we trade on it differently.
Yeah, so we have about 3 minutes to go. So I thought maybe we could just have each person could give a closing thought of something that seems most important to take away. So start with you, Tommy, and then.
Well, yeah, I guess my point was already quite well represented in the sense that I would rather try to understand the data to some extent or to the maximum extent rather than basically taking as given and then taking too much of it. So basically by wise choices you can actually minimize the data problem to some extent at least. And then have an understanding of the theory, or have a theory of how basically the prices, for instance, should behave at the market microstructure level, and they take it from there. And the backtesting that we are doing tries to be as flexible as possible and as realistic as possible, so you know that market making and these type of activities are, very hard to simulate realistically, but that also makes it a very interesting problem, and I think you can at least achieve like 70 or 80% accuracy for that type of problem, basically.
Yeah. There's no question there's a lot of really interesting problems out there.
Sorry?
There's a lot of really interesting
Oh yeah,
questions.
yeah. There is, I guess, for the people that don't know, the basic problem is that in market making, your trading activity will most likely affect the other people's orders. So that's one of the hardest problems, of course.
True. David?
Sure, yeah, I'll keep it short since I guess kind of my last comment I think was a little bit of my key point. I just think that we're kind of entering this exciting point where there is a lot of kind of talk about big data and everything else, but I think it's the people out there who can expand their core competencies of execution and data management to incorporate a little bit more of the data insights that are going to be kind of the most successful over the next 5 years. And I think we've already started to see that in our client base, and they're getting a sustainable kind of unique information advantage, and I think we'll continue to see more firms adopt that policy.
Great.
Sure. I guess just thinking of your final thoughts on this, really data management. If you look across all the different types of data, starting with market data, then moving into like news, all the stuff around the periphery now is being involved in that sort of trade decision cycle. From obviously from market data, went to news, even companies that provide announcements, like corporate announcements, events, thinking of like earnings announcements, things like that. That all has market moving potential, just like sentiment coming off. Unstructured content is all market moving potential. So there's a lot of requirements. You can almost look at this as this gigantic Venn diagram of all these things coming together, and what's the sweet spot in the middle for that. And it's really about sort of managing the scale behind that, the technology to manage that scale, which is certainly achievable nowadays, but the driving force becomes both the quality of that data to be delivered to those business users and based on the kinds of applications or solutions they're trying to build, again, like research and backtesting and transaction cost analysis.
That's great. It definitely sounds like there's plenty of things to research, plenty of edge left for people who are determined. Well, thank you, each of you, the three of you, for coming. David, Lewis, and Tommy, appreciate it. And everyone, have a good morning.
Do we have any questions for the panel? Great. All right. Thank you, guys.